Welcome back to the channel. Today we're diving into the world of cryptocurrency to talk about why Bitcoin might be headed for a massive price surge in 2025. Now, I'm sure you've heard all the buzzwords halving, institutional adoption, blockchain revolution. But don't worry, I'm going to break down these complex topics into simple terms that anyone can understand, even if you're brand new to Bitcoin. We'll explore the factors that could potentially drive Bitcoin's price to new all-time highs, so buckle up, grab your notepad, and let's get started. Okay, so let's talk about the Bitcoin halving. Imagine a scenario where the rate at which new Bitcoins are created gets cut in half. That's essentially what the halving is, and it happens roughly every 4 years. The next one is projected for 2024, and it's a big deal in the Bitcoin world. Miners use powerful computers to solve complex mathematical problems, and in return, they get rewarded with Bitcoin. The halving reduces this reward, making it more costly and competitive to mine Bitcoin. Historically, Bitcoin halvings have led to significant price surges. The 2024 halving could act as a major catalyst, potentially setting the stage for a Bitcoin bull run in the following years. For years, Bitcoin was seen as this fringe asset, something only tech enthusiasts and risk-takers dabbled in. But the game has changed. Big institutions like Tesla, MicroStrategy, and even Square have started adding Bitcoin to their balance sheets. This isn't just a fad. These companies see Bitcoin as a legitimate store of value, a hedge against inflation. Major financial institutions like Fidelity and JP Morgan are also warming up to Bitcoin, offering crypto-related services to their clients. This influx of institutional money is a game changer for Bitcoin. When these giants with deep pockets enter the market, they buy up huge amounts of Bitcoin, driving up demand and, you guessed it, the price. As more established players embrace crypto, it paves the way for wider mainstream adoption. Regulation is often seen as a scary word in the crypto space, but clear regulations can actually be a good thing for Bitcoin. Right now, the lack of clear guidelines creates uncertainty and makes some investors hesitant. Clear regulations, while potentially imposing some restrictions, can also provide much-needed clarity and investor protection. This can attract more institutional investors who are used to operating within a regulated environment. Governments around the world are starting to recognize the importance of creating sensible crypto regulations. As these regulations are implemented, it could lead to increased investor confidence, wider adoption, and ultimately, a positive impact on Bitcoin's price. Remember 2008, the global financial crisis? It shook the world and made people question the stability of traditional financial systems. Fast forward to today and we're seeing similar economic anxieties, with rising inflation and geopolitical tensions. Increasingly, Bitcoin is being viewed as a digital gold, a safe haven for the digital age. So, as economic uncertainty persists, we could see more investors turning to Bitcoin as a hedge, driving up demand and potentially pushing its price higher. One of the common criticisms of Bitcoin is that it's slow and expensive to use for everyday transactions. But here's the thing, technology doesn't stand still. The Lightning Network is a perfect example of this. Think of the Lightning Network as a turbocharger for Bitcoin. It's a layer 2 solution that sits on top of the Bitcoin blockchain, enabling faster and cheaper transactions. Imagine being able to send Bitcoin instantly, with almost zero fees. As this technology matures and gains wider adoption, it could make Bitcoin more practical for everyday use, further increasing its demand, and potentially driving up its price. Remember when using the internet was a novel concept? Now, it's an integral part of our lives. Bitcoin and cryptocurrencies are on a similar trajectory, moving from the fringes to the mainstream. El Salvador made history by becoming the first country to adopt Bitcoin as legal tender. Major companies like PayPal, Microsoft, and Starbucks are integrating Bitcoin and other cryptocurrencies into their platforms, making it easier than ever for people to buy, sell, and use digital currencies. As more people become comfortable using Bitcoin, the demand naturally increases, and with a limited supply, that can only mean one thing, a potential price surge. Let's talk about FOMO, the fear of missing out. You know that feeling when everyone's talking about an investment, and you're afraid of being left behind? It's a powerful psychological force, and it plays a significant role in the cryptocurrency market. When Bitcoin's price starts to skyrocket and everyone's making money, people who were initially hesitant suddenly jump on board, afraid of missing out on the gains. This influx of new buyers pushes the price even higher, creating a self-fulfilling prophecy. But here's the thing about FOMO, it can be irrational and lead to impulsive decisions. Just like it can drive prices up, it can also lead to rapid sell-offs when the market takes a downturn. While FOMO can be a powerful driver of Bitcoin's price, it's important to approach investing with a level head and not let emotions dictate your decisions. Remember when Elon Musk tweeted about Dogecoin and its price went through the roof? That's the power of media attention, especially in the world of cryptocurrency. Positive news coverage, celebrity endorsements, and even viral social media posts can create a buzz around Bitcoin, attracting new investors and driving up demand. When Bitcoin is featured prominently in mainstream media, it raises awareness and piques the interest of people who might not have considered it before. However, it's important to note that media attention can be a double-edged sword. Here's a fundamental concept that makes Bitcoin unique: its limited supply. Unlike traditional currencies which can be printed endlessly, there will only ever be 21 million Bitcoins. This scarcity is a key factor driving Bitcoin's value proposition. As demand for Bitcoin increases from institutional investors, wealthy individuals, and even retail investors, the limited supply creates a supply-demand imbalance that puts upward pressure on the price. Think about it like a rare collectible, like a limited edition sports car or a one-of-a-kind piece of art. The rarer it is and the more people want it, the higher the price goes. So, as more people recognize Bitcoin as a store of value and a hedge against inflation, this limited supply could become even more significant, potentially leading to substantial price appreciation in the years to come. While Bitcoin was the first cryptocurrency, it's no longer the only game in town. The world of blockchain technology and decentralized finance, or DeFi, is rapidly evolving, with new applications and use cases emerging all the time. We're seeing the rise of decentralized exchanges, lending platforms, stablecoins, and even NFTs, all built on blockchain technology. While Bitcoin might not be directly involved in all of these applications, its success and underlying technology have paved the way for this innovation. As the DeFi ecosystem grows and matures, it creates a broader demand for cryptocurrencies in general. The growth of the overall blockchain and DeFi space can create a more favorable environment for Bitcoin, potentially contributing to its long-term price appreciation. So there you have it. 10 reasons why Bitcoin's price could see a significant surge in 2025. From the halving event to the rise of DeFi, the stars seem to be aligning for Bitcoin to potentially reach new all-time highs. But remember, while these factors paint an optimistic picture, the cryptocurrency market is notoriously volatile. Always do your own research, understand the risks involved, and never invest more than you can afford to lose. Thanks for watching, and don't forget to like, subscribe, and hit the notification bell for more updates.